Check one, 1, 2, 1, 2. So today we'll be going over today's trading day. So I just took one trade today and I lost around like $200. It wasn't that bad, and I asked myself before the trade if I took the trade and after I taken the trade, would I regret it or would I not regret it? And I thought to myself, and I said, there's enough confluences in the line and the risk is not that high that I would not regret it. So I took the trade, lost it, didn't regret it. So we're just gonna go over the day, just kind of just chill and see what price was giving us. So this was in the nighttime. This was yesterday's, and then we got up here, and then usually we would kind of get a ranging session during Asian, but Asian went here. There was no liquidity sweep during London. We just went straight up. So this is coming into the 9:30 a.m. So we'll get this. So this is 9:30. This is 10, just for the 10 a.m. reversal. So, again, during these morning sessions, I see that like prices just ranging. Like we don't get the real moves until like lunch, but I'm already at practice by then, so I'm only trading from like market open until um the kills and ends around 8 my time, around 11 New York time. So price. This was the opening gap that we got to. That price reacted from, and there actually was a really clean inverse right here when price came above. But the thing with this one is that, oh no, this one actually was pretty good, but I wasn't trading this one anymore. Because I took this loss and I was like, I'm not going to take another trade because I took my loss and I'm not exactly sure what the market would be doing, because we could have kept going down just because there was this SMT up here. We swept this high. Well, I don't think ES did. I'm not going to check because the charts are just super weird, bro. So then in terms of like my aversion play like model, so we had this one that price was respecting completely with all the wicks that you can tell. And then price did not sweep this low. But the thing with the longs today is that this was my draw on liquidity right here. I wanted to see these equal lows, perfect equal lows, be taken out and then a move higher. And so did ICT. I was on his live stream. He wanted to see I think it was the 0.7 around 0.75 to 0.5, yeah, the 0.5 to 0.75 range from the overnight session, from the regular trading hours. He wanted to see that be filled before we moved any higher, but price just seemed to kind of have this as its like rejection block, and then just rejected from that, even though there wasn't any SMT or anything. So this was actually my short. So there was a 30-second candle in here, and we swept this high. We got SMT. We're delivering from this fair value gap, the opening range fair value gap. That is a very high probability fair value gap. Not high probability, but it's like not necessarily it's like a magnet, more like a magnet for price. Like price will range around this area. It's just lots of liquidity, lots of orders around here, and then price on the 30-second. I will put the oh yeah, well, let me get it really quickly. I want to find the from this morning. Just give me a second, guys.
Everybody, it's Tony Robbins. Listen,
Holy
have
shit,
you heard about our
Tony.
Time to Rise Summit? It's coming up on
Holy
Thursday.
shit, Tony.
I only do this.
Tony. Let's go. Let's see what time we are. So that's 10 o'clock. This trade was around. Yeah, it was around 10 o'clock.
To get in sync with the marketplace. Like if you miss a really good 15-minute entry or a 5-minute entry, or you miss the perfect, all we're doing.
Alright, so as you can see right here, we had this clean fair value gap. That price was delivering from here. We made an energetic move up, and then we closed down under it, closing below it. We tapped back into that inverse, and price should be going lower because we swept this high, the SMT here, closed below. So I entered, was marking out this fair value gap the price might come into, and I had my stop. The thing with this is my stop was kind of random. It was like around here because I didn't want to see that be taken out. There was no real reason. Then I saw price coming up here way too energetically. Then I exited, and then he hit a stop loss after. The thing with that trade is just the reason why it might have been bad is just because we had such a energetic move during London. But no, I still think that was a good trade with a high probability, and with the 10, we had this kind of Judas swing during the 9:30 to 10 o'clock, and then at 10 o'clock, I was shorting a lot of ICT traders that I shorted right there. So you have to kind of think about it from ICT traders and the 2022 model, because in a way they can be liquidity because their model is pretty basic and a lot of people use that model. So you have to think from that point of view. But then after this, there was obviously this one, which was really clean because we had this price just holding, hold here, hold here, hold here, hold here, and then close above it energetically. We still haven't hit this high yet, which is the 9:30 high. We come back into it many times, and then we close above this, marking a change in, not necessarily a change in delivery, but we make this an order block, and this would have probably been my entry if I was trading this. I would have entered here, but my stop loss like right around here because yes, this could be filled, but with this move up and after this high probability one here, I don't think it's going to close underneath this. So price might wick down, but I don't think it will close, and you could target. Your first target would obviously be here. Your first target would be right there, making this 3.9 to 1. Take off one contract, let the other contract run. Stop loss to break even. You would have. Just the power of some of these trades, because if you let your runners run, sometimes they'll get stopped down to break even, and that's fine, you have to accept it, but sometimes they're going to run for way longer. And as many of the trading psychologists have said, you have to add to your winners. That's how you really be able to, you really make your profits. Is by, when you have a winning trade, you got to add to it. So now let's just see up here. So at this point, the only trade we'd look for is we've got a pullback, a bearish for value up, and long. But again, with these longs, I would not like the longs because we still had this equal lows right here that I wanted to see price take out. So, so when we got up here, there was obviously this inverse that price taps back into. There's this inverse, but then price closes back above this one. But I think that's because we're just purely tapping into the first one that was inversed. We inversed this one with a change in state of delivery as well. I like this one because the reason I like it is because this would be the target right here. And then here we had the close, close candle, which you can't be afraid of, tap back into this fair value gap right there. And then from there you get displacement down, and then you take out this, the low, tapping back into this fair value gap. So therefore then you're delivering from this fair value gap. So if you're looking for long setups, technically speaking, now obviously I would not recommend looking for long setups, but then we deliver back up because market just runs to inefficiency to inefficiency, and what seeks liquidity and balance out inefficiencies. We deliver from this one, and then you're looking for a bullish for value up to be inversed. So that means this one, price inverses. Sometimes you can see the 1 minute ones that get inversed energetically will be retraced back into for future setups. So you could have obviously shorted here, not a high probability short, just a potential model. So it was pretty choppy all around here. And at this point, there's not really much point in trading. Because this one's a good one, because what I'm looking for is looking for the high not to be taken or the low not to be taken out. As you can see, we close here, and depending on the energy and displacement, you close without it touching the low, so that's still a valid entry. You could fucking full port this because you'd be really sure that this is at least going to be taken out before a bigger move higher. And then at this one, as you can see, because we're always going to be delivering from something. So as you can see from this, we're delivering from above this high, so there's still liquidity up here. We inverse this, inverse this along with that, tap back into it. But this would not be good because we already hit the high right here before we actually closed, so therefore it would not be a valid one. Then from here, we are delivering from this fair value up. And if you're looking for a fair value up like that to be inversed, so so this is a really nice inverse because there's just one in this whole entire leg. It's also a balanced price range, so you're looking, this would kind of be your perfect entry within this, so once price closed above this, you could long right here, but sometimes price might come back down to here. It really just depends on the situation. That's a good inverse for value gap play, because then you would target this, so the play would look something like this. Long, you're back in. The stop loss would be kind of wide on this, but I would kind of say that, if price shows its delivery past the consequent encroachment of that fair value gap, it would be a lower probability trade, and not something that I want to take. And yeah, so it would be a 1 trade, but then you'd hold, put your stop loss to break even, take off one contract, and let the other one run. Then it would have been a better trade. Just because of the risks. So you always have to be managing your risk and seeing what you're really risking. So for here, now we have another inverse. That price is completely respecting. I like this one long, actually, because it's another balanced price range. Price moved down. It took out this low right there. So we have a liquidity sweep. We are delivering from this fair value gap right here, but we never get the. See, this is good because it's just not something I like, because I don't like when price kind of bounces up here. It does show that there's like willingness to go higher, but we get the close up here. I would have entered. You could have. Oh, actually, this one's pretty nice because. So as you can see, we have this fair value gap, and price comes back down into the constant encroachment of that fair value gap to give you a fair value for price, and then you could have entered right there, long stop loss here, put your stop to break even right here, with your entry right here, and then you would have gotten stopped out. But the thing with that is that sometimes you won't get stopped out, and if you don't get stopped out, you make the money back from the times that you would have not stopped out, and the times that you did get stopped out, which you didn't want to get stopped out, because if you didn't get stopped out, you could make more money. So, and then after this, we're delivered from this fair value gap, we inverse this. All in all, there's so many inverse plays per day. You just have to be on the charts, you have to be in the right mindset, and you have to be willing to not take the trade. You have to be seeing what could go wrong. You have to be aware, you have to be ready of what you're doing, just ready to go. And then eventually we do take out the equal lows, which was my target for the day, so I'm not really too mad about anything. It's pretty interesting, like what I'm going to be doing now in my trading career, because, I want it more than I ever have. I'm working harder. But, next week I start my hard swim practices, and I have full-time classes for my college. So I think from now until the beginning of next week, I'm just going to be demo only, and maybe even next week I'll be demo only, getting ready to my classes, getting into them. And then after that, once I've been demo only, I've gained back some of my confidence. Then I'm going to go on to the fund account, past the fund account, get payouts, and start my fucking full life. But one thing I could have done better today is just, trust myself more. You have really put in a lot of work that you've gotten to the point where you're able to just kind of trust your conviction. So you have to get to that point where you're just confident in yourself, and the way you get confident in yourself is by proving to yourself that what you're doing is right. So you have to go back to demo. You don't have to go back to demo. If you could treat this account right here like it was a demo account, boom, bro, you'd be perfect. but you just gotta be a little bit more locked in on these accounts. And going back to demo, we'll do that, and definitely hopping off the ZOP, which is what we're doing next week, because classes start and the season starts as well. So it's time to lock the fuck in. So going into tomorrow, you know, I could see price low-key start to come down a little bit. I mean, if you so we technically do have SMT. We do have bearish SMT. Because Lion never made that all-time high. From I mean, it did make an all-time high, but it did remake the all-time high. We did here. Then here. Let's see our retracement. If we're gonna go lower, if we're gonna go higher, then we want to see we want to see this. It's all pretty much based on how are we going to deliver from this, or are we going to inverse this, marking a change in state of delivery. This is very important for autonomous trading. Talk to you tomorrow.